It's about that time of day again. My name is Joseph. It's Tuesday evening, January 24th, 2017. Welcome back to your nightly newsletter. We're covering crude, S&P, gold, euro, and FDAX this evening. Crude is bearish after this afternoon's API report, trading at the low of a bear channel and a measured move this evening. So our plan is to wait to sell high tomorrow up inside the battle zone. The E-mini S&P is bullish after a big run higher today, but price moves so far, so fast that we assume buyers will be weary of buying this high, and we're staying patient for a deeper correction tomorrow. I'm expecting some traps on the S&P. We've got a great chart to look at in just a moment. Gold is bearish, the yellow metal bearish and trading at the measured move and the low of a channel this evening, so we're waiting to sell the highs tomorrow. The euro is bearish, trading at the measured move and the low of a bear channel, which tells us to look for selling opportunities up at the high of the channel and the battle zone tomorrow. And the FDAX, fresh off that nice move off the pendulum swing from last night's newsletter, the FDAX is bullish and trading at the high of a bull channel this evening, which tells us to look for buying opportunities at support levels waiting below. Boy, as always, get another great newsletter in store for you guys and gals. Plenty of great tradable opportunities setting up for tomorrow. We had a great newsletter last night filled with opportunities today. We're going to do it again here tonight. Before we jump into those charts, though, I do want to remind you, the only place to watch the full-length version of this video is on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, it's only a small snippet on the YouTube channel. Not to worry. There's a link right in the description of that YouTube video. Follow that link and come join me here on the blog at Sideways Markets for the full-length version. While you're here, don't forget, join the mailing list. I'll send you an email every evening when our nightly newsletter is ready to go live. I'm always posting updates throughout the day on social media. If you want to grab all the charts from tonight's video, follow that link in the right below the video tonight on the blog, and of course in the upper right hand corner. Don't forget, we get a free pass here to attend our trade room. You'll learn more with me in 90 minutes on that free pass. Grab that free pass in the upper right-hand corner. And if you're brand new here to the SOT community, please don't forget, we get a great frequently asked questions page. You can learn the who, what, where, when, and why. We're known as being the industry standard in futures trading strategies and professional education. I'm always here standing by. If you have any questions, holler at me using that live support button on the right-hand side of the website. There's also a live support tool on the home page at SchoolOfTrade.com. Boy, what a great day we had today. Boy, this first month of the year has been an awesome January 2017. Hope you guys are doing well out there. Great week so far. Got a big day coming up tomorrow. Tomorrow's, of course, being a Wednesday session. Tomorrow, Wednesday, January the 25th. Sounds like a great day, right? Wednesday the 25th. We got the inventory report tomorrow. That'll be the headline news for most of us here. Right? If you're trading crude oil or the S&P, you definitely want to be aware of that petroleum status report tomorrow morning at 10:30 a.m. That's really all we kind of have. You know, we got the IFO survey at 4 a.m. tomorrow morning from Germany. Beware of that. If you're trading the London session, we'll then go all the way down to that 10:30 a.m. news, right? The petroleum status report, which will most likely for all the U.S.-based traders, right, and when trading the U.S. markets will be the big news of tomorrow morning. Now, this isn't the old inventory report. Don't forget, 15-minute buffer, right? 15-minute before, 15-minute after. Don't try to wrestle that volatility. Volatility appears to be very enticing as a new trader, but remember, there's no liquidity, right? It's difficult to get in and get out at the price you're seeing on your chart. Stops don't hold. It's a real dangerous environment. So give it that buffer. It'll usually slow down pretty darn well before the inventory number comes out as of 10:15, and then it will be real quick, right? Real volatile after 10:30, and so you'll want to stay patient and trade into that end of the morning session once that news comes and goes. And again, it's not just for crude oil, right? You're going to probably see a little bit of reaction there to the S&P 500 as well, so keep that in your back pocket tomorrow morning. Don't forget, we're going to be trading this stuff tomorrow in our trade room. Opens up at 8 o'clock Eastern time. You don't need to do this alone. Come out and see me. We'll be in there with all of our advanced members here at School of Trade. Let's jump right in. Now, we got crude oil tonight. We just came out of the API report, right? So, of course, crude oil, obviously bearish, right, after this afternoon's API report, right? Write this down. Every Tuesday evening, 4:30 p.m. Eastern time, right? The market will jump around a little bit there, as you can see here, right, courtesy of the API report. Tuesday evening at 4:30. The following day, Wednesday at 10:30 a.m. is going to be the DOE number. What we're going to do is we're going to use that API report to project some levels for the following day. I teach all the technique of doing this in the beginner and the intermediate courses here at School of Trade. So we're obviously bearish, right? We're reacting to this afternoon's API report. We're right at the low of a bear channel and a measured move this evening. The bears have control, but we don't want to sell into all this support on the chart. So the plan is to stay patient and look for selling opportunities up around the high of the channel and that battle zone tomorrow. One thing to keep in mind is that inventory report tomorrow, which again is due out at 10:30 a.m. Eastern time, and that will be a major market moving event. You know, I talk about this all the time to new traders. One of the biggest reasons why I love crude oil is that it really only have to worry about one news event every week, and it's tomorrow morning at 10:30 a.m. Eastern time. So we got a great market here in crude oil. It's a liquid market. It's a volatile market. It's not too liquid like the S&P or the bonds, right? It's not too volatile, right, like some of the metals markets, right? Gold, platinum, silver. So it's a great kind of balance, at least in my book. It's great opportunities every day. I'm a big fan. At $10 per tick, it's a great market for really anybody to trade. I've always been told that people shy away from markets like crude oil, but I'm telling you right now, don't miss the great opportunities we get every day on the oil market. As you can see here, we got a bear channel on the chart. Right, bear channel. The day starts off obviously as a bull spiking channel. That bull spiking channel really made a good effort here, right, when it pulled back right into the battle zone. This, of course, being going into that 230 old pit close, right? They had a good effort there to return back to that high, but it's pretty obvious to see though that those buyers gave it a good try, but they definitely failed. And so, of course, now we're looking at a measured leg down. We're looking at what really at the beginning is just falling resistance. But then, of course, look back in time, right? Connect those lows, and now you get your bear channel. So most important thing here is going to be the bear channel. We're at the low of that bear channel. We don't want to sell at the measured move. We don't want to sell at the low of that channel. The ideal scenario is going to be to get back up around the high of that channel and sell this price back down again. That will definitely be where the most reliable selling opportunities are going to be. Whenever I see a bear channel on the chart, I'm going to sell the high of the channel. And I also want to be aware that above that high, any of these areas of resistance, right? It's that prior swing, right? The high of that channel. This area kind of creates what I call the battle zone. So really get up in this area and then back down. That obviously will be where we get the most reliable opportunities as that price goes higher. If price goes lower, be careful. Be careful trying to sell down here. What I like to always do is if for some reason this was to open up and keep going lower, look for traps, right? Look for traps. If we see real proof that this thing wants to just keep dropping right down to retest today's lows, look for traps. That way you're not selling low. That way you can focus on selling high, right? So if for some reason we don't get that rotation back up to the high of that bear channel, right, that'd obviously be the ideal scenario. If we don't though, if the bottom falls out of it, we're coming out of news here. If the bottom falls out of it, don't chase after it. Wait for those traps, right, and sell it back down. Try to catch those counter trend buyers, trying to catch a reversal, right, and sell right into their stops. Really, the big thing right now is these API numbers, right? We got support levels listed below, and this is going to be important because you'll be amazed at how well these markets bounce around, they kind of ping pong back around, right, these levels. So to make this really easy, boy, would it be nice to use any of these levels, right, up overhead, right? So price goes up, moving average comes over, buyers try to reverse it, they fail, right, and back down, right? That's one easy scenario to consider, right? Selling those pullbacks, of course, right, on the way back down, right? So selling the failures, selling the pullback setups, right, as we try to go back down and retest that low. So the objective really right now is stay patient, wait and see what we get. If it goes up, we're looking in that battle zone, right? Using those API levels would definitely be a definite benefit for or bonus for us tomorrow. And of course, as we go back down, right, using those API levels, right, as support. If we do go lower here, again, look for those traps, right? Look for those traps so we're not selling low. It's tomorrow's inventories. What would a bullish scenario look like? I'd have to literally run a bull scenario, would have to get above, we'd have to hold, and then really once we get up above that API number, that would really be where you'd be through the battle zone, you'd be over all the resistance. You got to think they're going to be sellers trying to position themselves selling high here tomorrow. You might be able to get something, short term in between these API numbers. Something like this, strong move up, hold the pullback. You might be able to finagle something in there, but this is going to be a real tight little spot there. And again, as this price goes up, you're going to have sellers coming in, right, to sell it back down. The key word is going to be strength. If you want to be a buyer tomorrow, we need to see this thing go higher, hold a pullback, and continue if we're going to be able to confidently, right, want to trade this thing long here. At least until we see the news come out tomorrow morning at 10:30 a.m. Don't sell low, sell high. I know that's always kind of a very cliche, but this is a really good example of where we don't want to make those mistakes tomorrow. We'll be trading that market tomorrow morning with all of our students, by the way, at 8 o'clock Eastern time. How about some S&P? This is kind of a fun chart. I know it looks pretty simple here, but there's a lot of learning opportunities here and hopefully some earning opportunities for you guys tomorrow as well. The S&P VE Mini is bullish after a big run higher today, but price moves so far, so fast that we assume buyers will be weary of buying this high and will stay patient for a deeper correction tomorrow. Now, big moves like this, right? Big moves like the one we saw today, tell me to look for a possible trading range tomorrow and bull traps, right, as the price tries to retest the high. I'm going to talk about that more in just a moment. One thing to keep in mind tomorrow will be buying low, which is so much easier said than done, right? But when we get up to these lofty areas here, it's going to be easy to try to chase after moves because you're thinking another one's coming. The key is going to be stay patient and try to focus on buying low. The plan will be to look for traps and failures at support levels and looking for ways to buy low while catching traders on the wrong side of the market. Now, there really are a couple different scenarios that you want to be thinking about tomorrow. We have this really strong, it's obviously bullish, right? I'd be wasting my time looking for a measured move or a double up right now, right? This is one of those markets that for whatever reason, I'm not going to waste your time or mine and try to tell you what happened or why it happened, because there's never going to be one single cause that causes markets, right, to move, right? There isn't what they call a linear cause and effect, right? It's not like one news event came out. It's a collection of where this market has been, right, and the conditions it's in, right? So I won't waste your time on that. We're obviously bullish. Really the best clue we have right now, I think there are two really big clues. One is going to be this obvious, right, huge bull channel, and really at this point you're kind of calling this a multi-tiered channel. I'm very much kind of reaching on this because when a market runs with this much strength, it doesn't have any regard to measured moves or moving averages. This thing clearly, something got under the skin and ran this thing higher today. When that happens, we obviously want to buy the low of this bull channel, right? I mean, that's where we obviously want to be a buyer below that low, right? Down at that low. Like we talked about on crude oil, a bear channel on crude, sell the high, bull channel, buy the low. So obviously that's going to be the most desirable, right? Get down to that low, but I'll be darned, man. You see people you see markets do this, and all of a sudden people do crazy things, right? They try to chase. They may have missed the move. Think about it. If you're somebody here that was waiting for this pullback all day, it never came, right? Well, now the pullback happens, and now, of course, everybody's barely contained themselves, right? And they want to buy this thing right back up. So we'd love to see this market pull all the way back to the low of that bull channel, but with so much strength, though, traders do funny things, and so we can kind of anticipate, right, what might happen right now. Here's one scenario, right, that you want to be thinking, and that is we go back up to retest the high. Right? That is the objective right now. The objective is to pull back, attract some more buyers. Buyers look at this and they go, wow, that's a bull market, but I don't want to buy high. I want to buy low. It'll pay better if you stay patient to buy low. And they'll stay patient for that, willing to miss the big move again, right? Just so they can get a cheaper price and a better value. So the objective is to go back up and retest the high. So here's one scenario that you want to consider. We're going to go through a couple scenarios here. Right, strong bull market, buyers to pull back to the moving average. The odds are pretty high that when we have a real strong run in one direction, the first time we pull back to the moving average, it'll run back to that high. The problem is that now we're back at that high. If we run back to the high, right? Here's what you want to be looking for. That now becomes the range low, and now we want to focus on buying those dips, right? Buying low. That's why I said, right? Be careful chasing after it. Focus on buying low tomorrow. In fact, get one of those little sticky notes and put it right on your monitor tomorrow so you don't fall victim to chasing up at those highs. Trust me, it's really easy to do when you're coming off a move